This episode of the Old Dogs REI Network is brought to you by Mino Studio. Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manassero.
Hello, old dogs, and welcome to
Fun Facts Friday.
This is our once-a-week, only on Friday show, where we have special episodes not featuring guests, where I will share tricks, tips, terminology, and techniques that will help skyrocket you to real estate investing success. Today's topic is why cash flow is king. But before we get started, I always like to touch base with you and just see how you guys are doing. I know that there's a lot of activity going on out there, especially for those that are selling right now. It's especially a good time to sell properties. If you don't have that opportunity and you're looking to buy, you're going to have to be a little bit more creative in some markets. It's just, it's tough. There's always good deals to be had, but you have to really look for them. And we have a lot of podcasts and blog articles about ways to do that. You can find those properties if you know where to look. Well, let's move on to our tip of the week. Buy a property with growth in mind. When you invest in real estate, you may eventually want to sell it, right? Unless you want to hold on to it indefinitely and just keep passing it down from generation to generation. There are times that it makes sense to sell. And if you're looking to do that, well, whether you're going to flip it or maybe hold on to it for a while, you obviously do want to make a profit. And the goal is to sell your property for more than you paid for it, right? One thing you should really keep in mind that if you have a property, any of your properties right now, you should always be looking for opportunities to improve it, to build your property value by adding simple upgrades or additions. Now, this has a dual-fold purpose. This can help the existing tenants to feel like, wow, my landlord cares about my living conditions and they're making things better for me here. And, you may have people renewing their leases more often and things of that nature. But also, you'll be increasing the property value. And if you are constantly upgrading and trying to make a property a little bit better, again, you want to keep the overall ROI in mind and don't go crazy, but you always should be doing something to kind of enhance the value. If you do that, you'll be able to get more for your property when you do want to sell. Well, let's move on to our topic, why cash flow is king. Now, if you've been listening to the Old Dogs REI Network for any amount of time, you know that we close every single one of our podcasts with the same statement. Remember, cash flow is king and real estate investing the means. And that's really the reason we do what we do here in terms of our real estate investing. We really believe, especially later in life, that cash flow is the single most important factor when investing in real estate, because it's the ability to generate passive cash flow income that will bring you to total financial independence. What is passive cash flow income? It's a system, process, or a structure that will generate income for you without you having to do anything. Well, let me qualify that statement. You've got to do something here. You cannot generate 100% passive cash flow income without doing something. That's impossible. You can definitely do some key things up front, though, that can help you generate mostly passive income later down the road, right? So, but before the passive aspect, let's take a look at the sort of not so passive things that you have to do to get to that point where you can generate that income, okay? Number one, educate yourself on where and what properties to buy and how to purchase such properties. Number 2, put together a team: real estate agent, broker, wholesaler, attorney, accountant, banker, contractor, property manager. Number 3, put together a strategic plan. Really key if you want to be successful. Number 4, research your markets. 5, find and analyze properties. 6, purchase a property either all in cash or through a mortgage. Number 7, set up a reserves bank account. Number 8, establish an asset protection strategy. Number 9, buy insurance. 10, make the property rentable. 11, find a renter or tenant. 12, maintain the property. 13, try to retain the tenant. 14, pay taxes and insurance. 15, pay your monthly mortgage payment. 16, make repairs as needed to keep tenants happy. 17, manage the investment and the money that the property generates. 18, establish systems to perpetuate and grow your investments. So that's 18 things right there that you need to do to be successful in generating that passive income. Now, granted, you may have to do these things only once. For example, if you're buying in the same market, you may keep the same team. You may not have to put a team together. But if you're buying more properties, a lot of these things you do have to do. You still need to analyze the properties. You still have to pay your taxes and insurance and mortgage and so forth. But this is, a pretty good list of what needs to be done if you're going to invest in rental properties, just to get started, okay? So you're probably thinking, that certainly doesn't sound very passive to me. Well, it isn't, but the goal is this: if you do the right work up front, you can skate later on, right? That's the approach we take. For example, once you go through all the research, planning, evaluating, and finally purchasing a property, you can then hand the management of the property over to a good property manager. I'll refer that person to be the PM, okay? Now, of course, you just don't hand the property over and that's it. To do that right, you'll need to first carefully research and interview many prospects before you can find a good PM. You're not just going to look in the phone book and say property manager and, oh, okay, I'm going to hire somebody. Find a good one. It takes some effort. The next thing you're going to do is need to build in checks and balances to ensure your PM is doing their job properly. For example, establish weekly or monthly reports that show where your property is at, highlighting key financial and or operational issues. Meet with your PM regularly via phone, Zoom, or in person. And then you need to regularly assess and evaluate your PM's performance and, if necessary, implement changes to improve operations. Now, once your PM is operating efficiently and according to your guidelines, you're ready for the next step: figuring out what to do with the cash flow income you're now receiving. Now, that's a great issue. You feel peace of mind, your property is being managed well, you can start to step back a little bit. Now, if you do this right, you will still have things you have to do, but not as often. For example, once you have that property manager in place with all the checks and balances and the reporting and they're doing everything that you want them to do, you might just have to meet with them once a week by phone for an hour or less, or maybe even once a month for an hour or two. You may want to, and I encourage people to do this, is fly to your property if you can, unannounced, and check it out. Just walk on the premises and check out the property and see how it looks. And then, of course, meet with your property manager and other local team members at least, once a year, maybe twice a year. But overall, once all your systems are in place, there will be very little required for you to do for that property. It's not completely passive, no, but it's very close, and it can be close. Then with the rest of your time, of course, you can go back to the items that I mentioned in the list 1 through 18 and start looking for a new property. And then you repeat that until you add that property, repeat again, add a property, repeat, until you have these properties are being well managed by a good team that you feel confident. If you're buying the same market, you might be able to get the same property manager. You might not have to do a search for a new property manager every time, but you've got this team that can manage that property well. Now, once you've reached your monthly income goal, you can stop buying properties and move to an overseer role, where you regularly meet with your PM or multiple PMs to stay on top of your investments. It won't be completely passive, but maybe if you manage it properly, you'd be spending 1 to 4 hours a week to maintain your income, depending on how many properties you have. It can work real nicely if you set it up the right way. So if you're thinking, okay, that would be nice, that's what I'm looking for, is that more passive experience. But, it sounds a little too good to be true from what I know and what you've heard from, others. It usually takes a lot more effort. So let's just dig a little bit deeper. First, let's just look at what is cash flow in general. If you want to create this, you need to know what it is, right? Now, according to Investopedia, cash flow is a term that's been used in business for years, but there's a lot of different types of cash flow in business. There's operating cash flow, includes all cash generated by a company's main business activities. There's investing cash flow, includes all purchases of capital assets and investments in other business ventures. Financing cash flow includes all proceeds gained from issuing debt and equity, as well as payments made by the company. Free cash flow, a measure commonly used by analysts to assess a company's profitability, represents the cash a company generates after costs. Now, these are very specific types of cash flow used in business. But real estate cash flow, as we're referring to it, is the amount of profit you bring in each month after collecting all income, paying all operating expenses, and setting aside cash reserves for future repairs. For buy and hold real estate investors, cash flow is the primary lever used to increase passive income. When looking at a real estate investment, there are two main components you need to fully understand and be able to forecast: income and expenses. Understanding the key financials of a property is critical and allows you to understand exactly what your cash flow will be. Cash flow equals gross rental income minus all expenses and money set aside for cash reserves. Okay, pretty simple calculation, right? It's what's left over after you've spent on all the things that you have to spend on, or put money in the places that you need to put it. Here's an example of how to calculate the monthly cash flow from a property. Let's say this would be something pretty typical in Indianapolis. You have a monthly rental income of $1,000, and your monthly operating expenses would be mortgage for $346, property taxes $216, insurance $38, property management at 10%, which is an average there, based upon the monthly rental income, so that'd be 10% of $1,100. Then you have your reserves, okay, money that you need to set aside to maintain the property and to be able to function operationally. You have vacancy reserves at 5% of rental income, depending on your risk tolerance. That'd be another $50. Repair reserves. Now, there's always going to be little things that are going to happen, toilets that are going to get clogged or what have you. 10% of rental income, that'd be $100. Again, adjusting it depending on your risk tolerance. If it's an older building, you have to bump these numbers up a little bit. If it's an A or a B property, it's not going to be as common that you're going to have the repairs at least. Also, that we have capital expense reserves too, and these are for those long-term, big ticket type items like roofs and HVAC and other high-cost capital expenditures. I would set that at, I'm saying 5% here, so that'd be like $50 a month. You can adjust it, based again on how new your roof is, how new your HVAC is, and so forth. The total monthly expenses on this property would be $858. So you're getting monthly income of $1,000. After all your expenses, you end up with a cash flow of about $100. And I know that doesn't sound like very much. You're thinking, gee whiz, all that effort for only $100 a month. But a lot of people work on those numbers, and I know people that own houses that do that too. They just buy a lot of houses to get their income. If your financial independence goal is $10,000 a month in monthly income, how many houses would you have to own Well, you're talking 100 houses at $100 a month in cash flow. Now, that might sound discouraging to some of you to think, gee, I'd go to all this trouble. It's not much of a return. However, next week, I'm actually going to continue this. We're going to talk about how to boost your cash flow, double or even quadruple your cash flow significantly by just doing a few tweaks here and there. And I'll show you that as well as other strategies where you can leverage from your single family homes, for example, into multifamily, which makes it a lot less of an effort to take care of a property with 10 units as opposed to 10 houses. So we're going to talk more about that next week. The key here is not just generating cash flow, it's building financial independence. Cash flow is important for a number of reasons. If you're a real estate investor, there are more reasons to invest for cash flow than anything else. And here are just 7 reasons why cash flow is extremely important for you and your retirement. Number 1, so your investments don't trap your life, all right? You may be wondering how an investment could get you trapped. The fact is that some people invest in stocks, bonds, mutual funds, and other investments that they really can't control. A major shift in the market could be devastating to a retiree who counts on those investments for survival. I mean, just talk to those who lost most of their retirement money in 2008. Bad investments can trap you, but if you have rental property investments that are generating cash flow, you have a tangible asset that you can touch, feel, and see that has real value and is something that people will always need. A rental property is a place to live and a roof over someone's head, and everyone needs that. You're not going to feel trapped nor live in fear that the market may crash because something happens in the economy. Your investment is solid and secure. Yeah, you may have to lower your rents a little bit. You may have to deal with other market factors that may impact you, but overall, the people that were investing, especially in multifamily, in the last Great Recession, they fared very well through that difficult time. So, the main thing is that there's a degree of risk in every investment. Real estate is not exempt from risk by any means, but I would rather invest in a piece of property, land with a building on it, than I would a piece of paper that says you own something you can't necessarily see, touch, or control. Number 2, so you can afford to invest. A good reason to have cash flow. Not all of us earn a great deal of money. We're paying for our life expenses like food and rent, and some of us may even have to pay for our children going to school. All of these costs are necessities, but they can certainly add up and become expensive. Therefore, investing in a property that generates cash flow means that you can afford to invest when and where you want. And if that means buying more properties, that's great. If you want to invest in index funds or some other type of investment that is tied to the market, you have that option as well. Number 3, you need cash flow to grow your portfolio. Your cash flow can help you to expand your portfolio while your tenants pay down your mortgage. It's a real nice deal, okay? You're earning money, they're paying your mortgage down, so the equity isn't going up in this property. If you have the cash flow behind you, or if you have properties that are generating cash flow, you can use that cash flow to buy more properties. Many investors who may be employed still use the cash flow their properties generate to accelerate their mortgage payoff, so that by the time they do retire, they've got tons of equity in their property, maybe even be able to pay off their properties in full so that they have nothing but cash flow coming out of there. Number 4, cash flow is important for contingency purposes. If you have cash flow coming in on a regular basis, you can put aside some money in a fund that can be used in contingency situations. If one of your properties needs a hot water heater to be replaced, which can be expensive, you can afford to make that purchase. By having cash flow coming in on a regular basis and a contingency fund saved, you're more likely to be able to pay for those expenses that you didn't expect. And that would include things like medical bills and things like that in your personal life. Number 5, you can start seeing the benefits sooner. Not everyone wants to wait until they turn 65 before they see any benefits. If you are generating cash flow, you can start seeing the benefits right away rather than have to wait till later. I've had, I don't know how many people on this show where they have retired as early as 20s, in their early 20s or the mid 20s, because they've generated enough income that they can be financially independent. If you buy and manage your investments right, you will have passive income from cash flow right now and use it for your lifestyle today as well. Number 6, so everyone else can pay off your mortgage for you, right? Rather than paying off your mortgage yourself, positive cash flow means that someone else is already paying that mortgage for you each month. The rental income is covering all of your expenses, including your interest repayments, and then generating passive income on top of that. You can siphon that passive income back into your mortgage, or you can even wait until the rental income goes up over time and switch from maybe an interest-only loan, if you happen to be in one of those, to a principal and interest loan, and therefore pay off your property over time. So having someone else pay off your mortgage for you is a pretty exciting idea. And while it doesn't happen right away, it is still exciting that someone else pays off your massive loan for you over time. And finally, the last one, cash flow helps you achieve financial freedom. One of the things that I get really frustrated about is when people decide that they want to invest in real estate properties, but they don't actually have a strategic plan. Without a plan, it's difficult to achieve what you want. I mean, real estate is pretty amazing that I think some people just stumble through it and still do well. But those that really have a plan usually end up retiring earlier, they reach their goal faster, and they're able to enjoy that financial freedom sooner. It happens when you've got more passive income coming in than you're spending in your everyday life. That means that you're not reliant on a job, wage, pension, or Social Security in order to live your life. You have the freedom to do what you want with your time, while your cash flowing property produces passive income that can help you achieve financial freedom. A lot of investors invest in a mix of properties, maybe over time. And some of them may not be the best. And the kind of the good thing, even there, when you've had a property that maybe you have trouble holding tenants or the neighborhood's gone bad or whatever it is, you can always sell those properties and get more cash that you can use to buy other properties until you end up with a mass of properties that allow you to generate that positive income over a period of time. Eventually, you can sell off a couple of properties and use the equity you've gained to pay down the debt on the properties that you've kept, and therefore turn them into an even stronger cash flowing situation by paying off the mortgage sooner. This means that those properties then start to fund their people's lifestyles and help them achieve financial freedom. Well, that's it. Those are my 7 reasons why cash flow is important. And next week as I mentioned, I'm going to go into how do you boost that cash flow? What if you are only getting $100 a month? Can you make 2, 3, 4, 5, 6? I mean, how much can you boost that? And we're going to talk about that next week. Well, that's it for today. Please note, Old Dog listeners, everything presented here today can be accessed in our show notes on the Old Dogs website at olddogsreinetwork.com/blog. And you're going to look for the episode entitled Why Cash Flow is King. So until next time, remember, you guys can say it along with me here, cash flow is king and real estate investing the means. Until next time, keep moving forward and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.